Welcome to Stocks in Translation, Yahoo Finance's video podcast that cuts through the market mayhem, the noisy numbers, and the hyperbole to give you the information you need to make the right trade for your portfolio. I'm Jared Blikre, your host, and with me, once again, is the voice of the people, Sydnee Fried, who's here to ask the people's questions and keep us from veering too far off into jargon land. And today, we're going to be talking about the space, rockets, robots, quantum, AI, and chips trade. Long-term viewers might even guess who our featured guest is today. But first, our phrase of the day, this time is different. It's the epitaph on countless gravestones of hedge funds that have crashed and burned, thinking that somehow we had arrived at a new normal. Is today truly different, or is history rhyming? And this episode is brought to you by number 50. That is the old 2011 dollar high in silver, which the market is fast approaching. How far can silver and gold rally? And today we are welcoming back for the fifth time Kenny Glick, who's the owner and operator of HitTheBid.com, a room for active traders that he's run for years, where he's better known as the Warlock. Kenny is also a former stand-up comedian who's been trading since the 90s, mixing comic relief with real-life risk discipline. He's also an avowed deadhead and a fierce advocate for VWAP, which we're going to break down for you too. Hello, Kenny.
All right.
5 times.
That was a great intro.
Thank you.
Wait, I don't think I knew about the Warlock.
Well, it's on his email. That's how I communicate with him.
Oh yeah, we got to only have a half an hour, so I got a bunch of nicknames.
All right, 5 timers. I'm impressed, but tell us where the market is, how you're seeing the market right now.
Oh my God, it's the same. I love it. As the most bullish bear on earth, I've had to check my emotions at the door every morning. But we're going to get to that. Is this time different?
Yes,
inevitably.
you bet.
But it has been incredible. And considering I've been trading since 92, I thought I saw a lot from 97 to 2001. The opportunity is better now because there's just more choices and more activity and more liquidity and more platforms. There's just more of everything, and it is just otherworldly, especially since COVID. I mean, COVID just kind of like woke up day trading again, and it has only tacked on from there.
Almost sounds like it's different, Kenny. Well, let's dig into this, because our phrase of the day is this time it's different. It's the old investor slogan that's used to justify ignoring history, claiming new conditions, they break old rules. Legendary investor Sir John Templeton called them the 4 most dangerous words in investing. And I know, Kenny, you're not saying that this time is different, and I think it's helpful to kind of see how history is rhyming here. So just kind of break it down how you're seeing things.
Well, the thing is, what's different now is that the sell-offs are so short-lived. We used to have bear markets. They seem like...
I remember those.
I know, my God.
Now they're quick.
I know, 2 down days in a row. What's happening? But that's the kind of where it's like, is it different now? Is there never going to be a sell-off? And that's kind of like that's what we're feeling right now. But I know there's going to be that correction. I know there's going to be selling, and I know there's going to be a moment where people say, "Hey, maybe I bought in too late." We haven't got there yet, but there's no denying the durations of the sell-offs are becoming smaller and smaller and smaller. And again, I'm in a wait and see kind of mode because I'm looking for shorting opportunities.
I know you are.
And they are not coming. And if you are a shorter, my saying, shorting is short-lived and it's not going to work. I'll just be nice.
All right. Yeah, that's a nice version. PG.
Yeah.
Sid, I know you got a question.
Well, I'm just curious, what are the risks then these days in the market if sell-off isn't really a big risk?
Right.
It's being in cash, Sid.
Oh, I guess so. Not investing.
I know. Now they're cutting interest rates, taking away our cash opportunity. But the risks are, first of all, the risks are not being involved. I mean, most people think everyone's in the market, and to some extent you are if you have a pension plan or a retirement plan. But the risk right now is to become a little bit too bullish complacency. That bullish complacency, but that used to be bearish when everybody seems to be bullish, which I think we're at. But if you look at statistics, there are still enough bears to keep the wall of worry going.
We're not in euphoria territory.
Right, we're not. Some people think we are, but really, truly not. And a lot of the stocks that we're talking about, that those space rockets, robots, a lot of them did consolidate and just began a new bull market. So, and as far as I'm concerned, it's so hard to be bearish because I really do think we just entered a new industrial revolution. And so far so good.
Yeah. Well, let's talk about that new industrial revolution and how you're trading it. We keep saying space rockets, robots, quantum AI chips, and this new thing that some of them have broken out, but specifically, what do you like? Like what tickers?
Yeah, well, obviously the RGTI has been paying us really well. And now there's a leverage version of that, which is thank you, stock market gods, because
There's a lot of leverage now.
holy cow. Anything that's invented right now seems to be created for me. Thank you. RGTX is the wildest thing I have seen in a very long time. So if you understand technical analysis, you understand breakouts, instead of buying the RGTI, you buy the RGTX. So if RGTI is going up 20 cents, the RGTX seems to go up 3 points. It doesn't seem like just 2 times leverage. It seems like it's a 10 times leverage. And they keep creating stocks like that. Even Oracle. I mean, the list goes on and on about these double and triple leverage stocks. And that's where you want to be going. But right now, the same stocks we mentioned a year ago are still really, really doing well. RR, that's the robotic stocks. You got, some of the lesser known names. You got Serve, you got ASTS, you've got, the Rocket Labs. And again, to your question about the risks, because they've gone up so much so quickly that, the risks are for a 20% haircut any day now. But then what? That's the question. So even if you top tick these stocks going in and you're getting in late, when they do correct, it's not like I don't think they're going to crash and burn. Some will, and that's why proper stops is how do you stay in this business. But right now, after the correction, it's probably going to be bought again. So it's just a great time to be looking at some of these stocks. And if you get an opportunity to buy them, buy the pullback.
Maybe though, leverage is the high risk, high reward now,
I am
right?
so glad you mentioned that.
Oh, yeah.
So what do you warn traders in your room about leverage and how to use it responsibly?
Well, I'll tell you, most of us, again, we're morphing right now. I love day trading because it's a visceral thing. You're either right or wrong that day. But now what I've been talking about is becoming a swing trader / investor. But
This is a sign of the apocalypse, my friend.
I know.
All right.
But it all starts with the day trade. So, we joke around about what's a swing trader? It's a day trader that has a position that didn't go right that day. I guess I'm holding it now. In this market, if your day trade starts out, and it starts to work, there really isn't a reason to cut it off. Some of these uranium stocks, some of these nuclear stocks, they just broke out. So if you're in a stock at 1250 in the day and you're making money on that day trade, for instance, just to give you an example, 1,000 shares at 1250, next thing you know, stock's at 1350, you're up $1,000. Sell 700, keep the 300 shares. And next thing you know, the stock pops another 7 points in the next couple of days. The breakouts are enormous. And again, what's different and what's, the same but not different, the breakouts are so huge. The days of a stock moving 3 to 5% after a breakout, that's your grandfather's market. Now we're breaking out and stocks are going up.
And without
20.
leverage, too.
Yeah, we're going 20, 50, 100% on just a typical breakout. That's not the way I was taught this is supposed to work. I come from the day where if you made 8 to 12% for the year, you were a stud. Now you got to do that every day or you're a loser. That's what's so nuts.
All right. Well, let's talk about options. We've talked about that with you in the past. Do you still like them? Are you still playing them? And because that's another form of leverage, but that can get really in the weeds here.
Yeah. Oh, again, thank you, zero date options, because now you could trade the QQQ every day. And instead of having to lay out $600 per share, you're laying out a couple of dollars. So, and for instance, if you want to just look at the market today, you finally had a shorting opportunity. Instead of having to, lay out $600 a share, you buy a slightly out of money put just for the day. Sure, if you're wrong, it's usually a zero. You're going to lose all of your money. But when you're right, it's generally 100% to 200, possibly 500. And if you have an actual real move, you can get a 10 bagger each day. And that's what's incredible about it. And, going, for stocks like RGTI, if you're afraid of those leverage stocks, you have the weekly options. So right now, like I said, this is by far the most wonderful market I've ever been a witness to. And again, it's because of every day I find something new and exciting. Like someone says, hey, what do you think about this stock? I'm like, wow, what is that? I'm like, I'm in. And it's just incredible how it keeps happening and happening. And I think, and again, a lot of the stuff that we're talking about used to make me bearish. I can't believe how awesome this
I've known you for about a year.
Right. These conversations usually, when somebody's this elated, I remember about the days of the irrational exuberance. I'm pretty damn irrationally exuberant right now, and it's the way to be. until something changes.
What would take the wind out of your sails right now? Like, what are you watching for?
Oh, great question. I'm watching volatility products. They are so dead. UVXY, UVIX, and the VIX. So if and you saw the last couple of days, the VIX products finally stopped going down. Oh, look at that. If you actually have follow through and some real excitement on the buy side on the VIX products, that'll alarm me, right? And again, we're in the week right now. This is notoriously where we do some seasonal selling. If you follow that type of trend. If you don't, you should be looking at the Stock Traders Almanac, Jeff Hirsch.
Yeah.
Fantastic. Yeah. Incredible guy. Incredible, vast amount of information in there. Everybody should have that on their desk. And again, this is the week. So it's supposed to be sell Rosh Hashanah, buy Yom Kippur, or Yom Kippur, depending on what, dialect you choose. And by the way, VWAP over VWAP.
Oh, we don't need to get into that again.
We're going to debate that. Yeah, but it is, like I said, it's just, if you're not witnessing it on a daily basis, like I call people who are not in the market normies. You have no idea what I'm talking about right now. People that are in this market, it's hard to believe after doing it for 30 years that I'm literally flabbergasted and amazed every day. And it's just like, I hope it never ends.
Yeah, I love talking to you here because you are a pure trader, and I'm getting a vibe from you that I haven't really seen in a lot of other places. So I appreciate that. And we got to take a quick little break here. So coming up, we're going to be talking about surging gold and silver and a runway showdown that pits two different types of traders against each other. Stay tuned. This episode is brought to you by the number 50. That's the price high in dollars per ounce that silver reached way back in 2011, which has held for 14 years. But this sometimes industrial, sometimes precious metal has rallied 50% so far this year, nearing $45 an ounce. It is a key ingredient in the AI trade. So, Kenny, tell us what you think about silver right now.
Oh my God, this is so much fun. I love it.
Yeah.
I've been buying silver. I was a baseball card collector back when I was a kid.
So you're buying physical?
I'm buying physical silver. So my whole life I've been surrounded by coins and stamps and baseball cards. That was my first love. I've been buying silver coins, for the last 20 years, but I really got aggressive when silver crashed down to like $18. Mm-hmm. So I've been buying silver rounds. I've been buying bullion, and I really, really love it. And I'm not a fan of trading SLV, but if you do trade silver, AGQ is the way to go, the leverage version.
Okay.
So if SLVs, doesn't cut it for you, it's a little SLV on steroids. But for me, I'm all about the bullion. I think once we get over 50, if we could actually stay above 40, it's big, because we haven't stayed above 40 in quite some time. If we consolidate above 40 and then get to those highs of 50, I think we get to $80. I really do. And it might not be an overnight thing, but the trajectory that we're on right now, awesome. And again, they keep talking about a silver shortage. I don't know if I buy into it, but whatever's making it go up, that's good for me. So I'm still buying. I buy every week, a little bit here, a little bit there. But like I said, I buy bullion, and I just stock it and put it in my safe and store it at my mom's house with my baseball cards.
At your mom's address.
Yeah.
Nice. So
big fan. And like I said, if it gets over 50 and could stabilize over 50, I think we'll see $80
prior
silver.
ceiling becomes a floor. Watch out.
You got it. Exactly.
What is best for a first-time buyer, the physical or like some ETF potentially?
It depends if you like holding your coins. I mean, I get a kick out of it. I buy silver rounds with anything with a Viking or put a dead logo on a silver coin. I'm in. So I if you want to own SLV, it's an easy way to own silver. But the easiest thing, and again, if you like collecting silver coins, they're called silver rounds. You don't have to buy the Eagles, because the Eagles are the U.S. government official coin. They have a little premium, but you could just buy 1 ounce rounds. You get them for $1 over spot. And it's a nice way,
Yeah, but if you're doing that your whole life, like storage, where are you putting all this stuff?
Your mom's house.
Yeah.
That's what you just said.
My mom's like, when are you coming to get all this stuff? I'm like, I just brought you more.
Make your own silver shed or something.
What about gold? What about crypto?
Listen, it's hard not to like everything in the everything go up rally. The crypto, I'm still in the same stuff that I was in from 2018, and I still like it as much.
So basically Bitcoin, Ethereum?
Bitcoin, Ripple, and I love what people call Ripple. That's the scam. Oh, opposed to the other 2 million that are out there that I don't understand. I bought Ripple because I'm a deadhead. I bought Tron because if you can own electric currency, you might as well own something called Tron, right? I mean, come on, Jeff Bridges.
All right. I love that you buy things because of the name.
Right.
And honestly, people do that. So.
Right. You got Algo. That's, same one. I got Algorand because if you can own crypto, it's Algo. Come on now.
Are these things necessary for a portfolio, whether it's silver, gold, crypto?
Well, pure diversification, sure. The old adage of buy gold and silver when the market is terrible, that doesn't work anymore either because it's not a hedge. Obviously when the market finally did correct, Bitcoin did not provide a hedge. It was just the QQQ on steroids. So that kind of doesn't play anymore. But as far as diversification, sure. If you want it, you have to own some gold and silver. And again, depending on where you go as far as crypto is concerned, obviously you want to go to the mothership, Bitcoin. It's going to be the one that's probably holds its value. But man, I mean, I heard there's 5,000 of these things created every day on these open markets. I'm going to create one soon. So everyone's going to have a coin. You don't have a coin yet? What's going on?
Glick?
Yeah, right. Glick coin. Why not?
I'm
right?
up to my neck in Glicks here.
Right.
We haven't talked about VWAP next, or that's what we're going to talk about next, but we haven't talked about it so far. We spent entire shows talking about VWAP, but just to break it down, volume weighted average price, you can measure it intraday and it kind of gives you a guideline as to whether people are in the money or out of the money, if they're making money, if they're losing money, but you can also do it over longer periods of time. And we've talked about that, anchoring it, for instance, to the first calendar day of the year, or an earnings low, or a price high, and it just kind of gives you a gauge, like an equilibrium price. Are you still using VWAP?
That's all I use. I have nothing on the chart except today's VWAP and prior day. And I love that you just mentioned anchoring it to certain specific dates. So as we enter earnings season, what I like to do is I anchor the VWAP back to the prior earnings day, and then even another quarter behind that, just to give basically a 3-month and a 6-month VWAP to give me an overall picture, and then
Kind of like a roadmap.
Right, exactly. Oh, it is the roadmap to success. It truly is, because what it's telling you from the last quarter of the last earnings is telling you if the institutional buyers are still there, and that's who moves markets. It's not guys like me who are buying 1,000 share lots of something.
Because they like the word Tron.
Right. I want to know where the real money's going, and that's what volume implies if you don't know. So more volume, more better. And again, with what we do is, for as far as, just to give it something that we looked at this morning was Micron Technology. Again, bull market, stocks down. You figure it'd be an easy buy today, but it really never got above VWAP, and VWAP is telling us, maybe not today. Kenny is actually going to be a stock that doesn't go up, and it was actually a short.
It does happen.
Right, it does happen. I know. As rare it is as it has been lately, today was that day. So that's, again, and then that's one of my favorite trades. So when especially in the bull market, if you have a stock that reports earnings and they're bad, for instance, take a look at what Tesla's done since their bad earnings a couple of months ago. The stock's up 100.
Yeah, I know you're
points.
A perennial Tesla fan too.
Yeah.
And it's coming back. So.
Big time, yeah.
Positive on the year.
But right now, with earnings coming, it tells you whether there's strength to the stock. So if you get the opportunity to buy a dip, especially in this market, and you break VWAP, that's it. That's your starting gun. And also, it's a very limited risk trade. So if you're trading around VWAP and it doesn't work, for instance, if you bought the Micron Technology today and it didn't break over the VWAP, that's a warning sign, and that's what you have to take under advisement and say, okay, this one's not working. Take a small loss and move on, or even join the winning side as a short.
All right, let's move on to our runway showdown. We are pitting two investment strategies against each other. On the left catwalk struts buy the dip, which you just mentioned, Kenny. Thrifty, patient, waiting for a sale sign. And on the right, in strides buy the rip. Coming in hot, momentum at its back, not looking down. So Kenny, are you hunting bargains or are you riding the breakouts before they're gone? Kenny, which strategy bears it right now the best? Is it buy the rip or buy the dip?
I'm a dip and rip kind of guy.
So you're buying both. You're just buying.
Give me the dip and rip. It's basically, that's the pattern. So it's called the fake out, shake out, breakout. So it's a faux show bro.
I love that. I haven't heard that.
This all up.
No, I've been doing this 30 years later. Faux show bro. I have a tattoo on my back if you want me to show it to you.
Really?
Yeah. So
After the show.
The fake out, shake out, breakout. Basically, if you haven't noticed, most stocks, they'll go down just a little bit more, kind of want to shake people out of it before the turn. So it's kind of like faking you out, and then it shakes you out, and then the turn, and then you get the bro. It's the faux show bro. And if you get that pattern underneath VWAP, and you get the bro part as it's breaking VWAP. Over the last 3 years, just using that specific setup, it has provided a winning trade every time.
That is
I've
amazing.
never seen anything like this before. And I don't like to use the word every or to imply it's guaranteed. There will be
Well,
trades
you're the
that
biggest
fail.
bear I've ever met.
I know.
This is crazy.
But this is the pattern, because what it does is it shakes the longs out and it also convinces the shorts that, hey, we're onto something. And then the U-turn, then the VWAP break. So it's a very visceral moment for everybody. The longs just got shook out. They want in. Fear of missing out.
Nothing is a better setup when you got emotions, like heavy emotions involved, both greed and fear at the same time.
Right.
I want to rephrase it.
Yes.
So like, if a stock dips a little bit, buy that dip, and then even when it shoots back up, buy more of it.
Well, what you really want is the double dip. You could
Okay.
you don't want to double dip your chip, but you could double dip your stocks, right? So the double dip.
Let's see. This is a Seinfeld episode
Yes.
we're making.
Yes. It kind of breaks that low, convinces you for a moment that it's not going to go, then it goes back up, then the break happens. So it's the fake out, shake out, then the breakout.
All right. I got to address an elephant in the room that's
Yes.
going to be a surprise for the viewers. This is the People's Voice's last show. It is Sayonara, the swan song, but you are moving on to greener pastures. We have loved having you. If we had a bigger budget and some time in our hands here, there would be a wonderful highlight reel. But it has been absolutely magnificent working with you here, Sydney. And I have never done a podcast before, so you were from the jump.
I don't want to cry on this thing, Jared.
All right.
Don't do this to me.
Okay.
I've so enjoyed working with you. I love all of our guests. Kenny, 5 times you're basically on this show with us.
I thought I was going to get a jacket or something. when it's all
like I said,
I'm
bigger
waiting
budget.
for my jacket. Yeah.
But this is awesome. Congratulations.
No, thank
I feel like this is, I'm honored actually. The final show.
The final show,
Yeah,
it
yeah.
had to be you, honestly.
Wow.
No,
Yeah,
but
it
this
had
has
to
been
be
great.
you.
We translate concepts for people,
Yeah,
Smart show,
adding
great
some
show.
color for the audience. All right, I guess I'm going to break things down here. I learned a lot. More volume, more better. And who doesn't like the space rockets, quantum, AI chips, and a few more other things to that trade? And then what else did I learn? Faux show bro. I'm going to have to replay the tape on that one. Maybe I can put something helpful on screen because it hasn't passed through my head just yet there. But Kenny, it is always magnificent having you here. The biggest bear in America is now bullish. I don't know if that's top ticking anything, but I know you've been
I've been
in this.
trying a top tick.
Yeah. So don't try that at home. Anyway, we got to go here. We are winding things down here at Stocks in Translation. Be sure to check out all our other episodes of our video podcast on the Yahoo Finance site and mobile app. We are also on all your favorite podcast platforms. So be sure to leave a comment, and subscribe wherever you get your podcast. We will see you next time on Stocks in Translation.